Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to Talking with Traders. This is the 5th season of the podcast to take us up to the end of 2022. Thanks to all our loyal listeners for returning, and welcome to all our new listeners. As before, IG Markets have come on board as sponsors of this podcast. We're truly grateful to have such an award-winning CFD provider as sponsor alongside us. In this season, I'll welcome back some guests from the previous seasons of the podcast to get their updated market views, and we'll also be bringing in some new guests to the microphone too. As always, the aim with these podcasts is to give you the opportunity to listen to differing market views and to assist you with your own trading and investing education. So with that in mind, let's get straight into another episode of Talking with Traders. Welcome back to another episode of Talking with Traders with me, Garth McKenzie. This week, I am delighted to welcome a new guest onto the podcast. He's new to our podcast, but not really new to the financial community in South Africa. Quite a big media presence. His name is Petri Redlinghuis. Petri, welcome.
Thank you very much for having me, Garth. It's a pleasure talking to you again, man. It's been a while.
It has been a while. We were just saying before we got onto the recording that we last spoke in 2020, so about 2 years ago since we last spoke. And you and I have interacted over the years on various different levels. Obviously, we both markets people, and I suppose mix in similar circles in the market. So it's been a while, but it's good to catch up with you again and to hear about how you're doing with Herenia Capital, but also just to get a little bit more about yourself. And I guess to that extent, what I always do with a new guest on the podcast is in 2 minutes, take us back to your beginnings. What got you into the markets, and give us a little bit of a sketch of the path that your career's followed to get you to this point where you've got your own firm and you're managing clients' money. So 2 minutes, go.
Okay, in 2 minutes. I started working sort of the barman kind of stuff. Then I worked for a construction company and they fired me because I was driving around the TLB instead of doing whatever it was I was supposed to be doing on site, which was a lot of fun, I'll have you know. Then I was kind of stuck at my dad's house, very young, didn't really know what to do. A friend of mine told me about this, check out this Forex stuff, pips or dollars or pips. It made no sense. I got a demo account. I was hooked. From that point, I kind of, everything that I did was with the goal in mind of, I want to do this, and every decision that you make is kind of one of, this is a stepping stone. And my goal is to get across the river. Is this next choice taking me closer to the goal or further away from the goal? And, step accordingly kind of thing. So as you know, I moved at one point to Durban, back to Joburg, moved to Cape Town, back to Joburg, Cape Town again, then back to Joburg. So there was a bit of a 10-year provincial tour, if you will, chasing the dream, trying to find just opportunities in stockbroking firms, hedge funds, prop trading firms as well. And at some point, I started a business. This was about almost 7-8 years ago now, and we're still here. Hey. Still here. So that's the 2 minute journey in a nutshell.
Okay, all right. Well, thank you. I think you did it in well under 2 minutes. Good to hear. But what you mentioned there, which is interesting, and I've obviously followed your career as you've moved around, and it's been hard to keep track of you, I won't lie. Moving from Cape Town to Durban to Cape Town to Joburg and Durban and Cape Town back again, all over the show. I never knew where you were really. But you mentioned that you've been in a couple of prop firms and you've had tried to get an in various different places. I have to say, I really do admire your tenacity, because I know it's not been an easy journey for yourself. You've had various different experiences in different prop firms. And some of those have worked out and some of those have not worked out quite as well as you would have liked, right? But yet you keep coming back and you keep trying. And it certainly appears from the outside now that you've kind of found your groove, and that your Herenia Capital Advisors has got quite a media presence. You certainly seem to be out there and in people's faces in a good way and getting a reputation. I presume attracting clients along with that. What I want to talk to you about, though, is that part about prop trading firms and your experience in prop trading firms, because I think a lot of people listening to this podcast may either A, not know what a prop trading firm actually is, or B, maybe they do know what it is and they'd be interested to getting involved in one and joining a prop firm, but don't really know how to go about it. And also don't know, what are the pros and cons of a prop firm? So from your perspective, tell us a little bit about your time in prop firms. You can mention names if you want to, or you don't have to.
I don't mind. Yeah.
It's up to you. I mean, but you've worked in a couple of prop firms. So tell us about your time in each of them and how it worked out for you.
Okay, I'll give you some more background, I think, leading into it as well. So at some point, I realized that, trading and stockbroking, it's amazing how over time your goals change, right? So initially the goal was I want to be a stockbroker. And then as you go further down that path, you go, well, I want to be a trader. And as you go further down that path, you go, well, maybe I should be, an asset manager or whatever the case is. So the goal keeps kind of shifting and changing. So initially it started with, I wanted to be a stockbroker. So I got a job at a bank, at a big bank working sort of, part of the after hours team and whatever. And I think that if I had stayed there, I could have done relatively well, but it wasn't really what I wanted to do. So I left the bank to go work at a company that sells courses, right? Now, over the years, I've come to learn that some courses, like yours, for example, are credible and worth doing. And some courses are not worth the paper that they're written on, right? Yeah. And, I'm all for people educating themselves. I think they just need to be very selective or very careful around what they choose to pay for and what they choose not to pay for, right? In any case, so I worked at this sort of training company where we would sell courses as a sales guy, right? And that was cold calling and literally hard sales to sell these trading courses. And essentially, in a relatively short period of time, I sold one of every course, right? And every course I sold, I could then accompany my client to the course. So I could do all the courses for free, basically.
Right. Yes.
And then when I had done all the courses, I thought, okay, well, now I know my business. I've done all the courses. I'm a trader now. And I went to a firm in Johannesburg. At the time, the office was still in Lova. I'm not sure where it is now, called Kratos Capital.
Right.
And I think it was 4 or 5 months, and I had to sell everything I had to pay the margin calls. It was a bad experience, man. I have to admit, I met some really good people. I met some really good traders. There's some crazy stories that it was a real eye opener for me to see, what that's like. And but the reality is I was ill prepared. I had no idea what I was walking into. I wasn't well enough capitalized. And, they were very kind to me and they were very helpful. But at the end of the day, I didn't have the skill set I required to do that. Right. And I learned a number of different difficult lessons there. After that, I went to Durban for a bit, worked at a sort of stockbroking firm there. Then Cape Town, worked at a hedge fund there. Then I headed up a trading desk for a firm in Johannesburg. Thereafter, I went back to Cape Town to work at another prop trading firm. So now this time around, I've now got a few extra years of experience. I've sort of found a groove in terms of swing trading and longer term stuff and, technical analysis I became quite proficient at. And I thought, okay, it's to have another go at the intraday trading stuff. And I think this second time around, that was at Storm in Cape Town.
Right.
And the second time around, I think, was a lot more educational for me than the first time around. Firstly, the amount that I learned in that room and from those traders it's hard to quantify. It is a huge amount of stuff that I learned, not just about the market, but about myself, about how I make decisions, all sorts of stuff. During that time, I'd worked with sort of a peak performance coach, psychologist, I suppose.
Right.
As well, to try and figure out how my own brain works, how I make decisions. I think the most difficult lesson I learned there was that I'm not an intraday trader, right? It's a lot of fun, and some people can make enormous amounts of money that you will hear the stories and you think that, the people are lying. It is extremely, it's really out there, some of the stuff that these guys can do. and with the level of consistency that they can do it with. But the reality is that is like 1 out of 100,000 people that have the ability to do that. And I don't think it's maybe not necessarily the ability, but maybe the dedication that they put in. I mean, if you listen to some of the stories of the successful traders at, either of these two firms, they've been doing it for many, many, many years, right? And they all started really struggling and really having to go through. There's not a single successful trader I know today that hasn't got some sort of a story of extreme personal sacrifice that they had to go through to get there, right? And I think that to kind of bring that closer to your question, what a lot of people do is they look at trading and they think, well, there's these guys that make, millions of rands every year or millions of dollars every year trading, and they live this lifestyle and whatever. I think that there's a misconception between the reality of what a full-time trader's life is, whether that be an intraday trader or a swing trader or even someone who's a more positional type portfolio manager type thing. There's a lot of people, I think, that fall in that category where you have a slightly, I want to say, more robust portfolio, and you kind of position trade 6 months, 12 months, and you live off your portfolio, but you don't have to actively, scratch at it every single day. Wherever your niche is, the way that it's sold to you, and I mean, this, I suppose, as well as anyone, because you're in the same space where you're trying to help people by giving them the tools that they need to do this, but you're up against people who are complete charlatans, right? And are out there and are saying to you, well, it's really easy, you just got to pay me 10,000 Rand or whatever it is, and you need no experience, and you follow these 3 rules and trading is for you. And I think that perception is created where the reality is that it's not that at all. There was a statistical study done, I think it was 2018 that it was published. I did a presentation on it. That's an interesting story as well. But I did a presentation on it, and I think they tracked, I'm going to round up, 20,000 people. It was 19,646. So 20,000 people they tracked doing intraday trading. Right. And over a 300 trading day period. So that's quite a long time, right? It's like 2-3 years. Yeah. And 47 made profit.
Out of 20,000.
Out of 20,000. Okay, 47 made profit. And only 3 of those made more than minimum wage.
Cheapest. So that really
okay, and then one guy was making $200 a day, so $200 a day, convert that to rands, that's a good living, right? Yeah, sure. So 1 out of 20,000 was like living the dream, and then everyone else was paying for it. Yeah. So that's the reality, and I think that people don't necessarily see that. The prop firms are tremendously helpful. I'm not going to lie to you. Not so much because they take you and teach you things. You learn from osmosis. You're in the room. You speak to the guys. You speak to the traders. You learn how they think. You learn what they look at. You listen to them talk. That is immensely valuable. But it comes with a caveat that the first 2 years that you go sit there, you're just trying to break even. Right? If you can make it through the first 2 years, then maybe you can start making a little bit of profit. And maybe after 4 years, you start making a decent amount of money. And if you look at a lot of the guys that go in, there's a lot of, well, not with all the firms, but, there's quite a bit of churn where people come in, spend about a year or 2 there and leave, right? And, in 2 cases, that happened to me twice, right? That I went into one, I didn't even last 2 years. I didn't even last 6 months, because I just ran out of money. And I think that first time I came to you a few times and I was like, hey, God, I need help with my trading. What am I doing wrong? Here's my trades. Bah, stack of paper. It's like, you're like, how long is this? I'm like, this is 1 day,
I remember it was quite a lot of trades. You were active.
Yeah. So, I mean, that's intraday trading. So I think that one of the more important things if you're new and starting out is you've got to understand that, one, this is like, if you want to do this full time, you don't learn to become a doctor in a weekend. Yeah. Right. And if you want to earn doctor kind of money from the market, which is why people want to do this, right? It's going to take you many, many, many years. And it's going to take you a lot of hard work and dedication to do this. This is not just, it's also not just, learn to do technical analysis. Okay, cool. Now you learn to do technical analysis, so you can identify trades. But there's now this fundamental and macroeconomic backdrop that comes with that as well. So yes, okay, the chart says this, but then a president opens his mouth and changes the course of history, kind of thing, or a global pandemic hits, or some sort of weird catalyst that you didn't think about, and it changes everything. And then when you start taking the trades, you have to realize that there's also this emotional component about the way that you make decisions. Why do you take positions the size you do? Why don't you stop out when you're supposed to? Why do you compound losses, or what are the things that influence me to make decisions? And the emotional impact of losing money or making money, or this is also dangerous. If you make 80 grand in a day, tomorrow morning your brain works differently, right?
Yeah.
So the chances of you giving back 30 or 40 of it is massive.
Yeah, or more,
so,
all of it,
or all of it, right?
Yes, because that's a common thing, right? I know when I was younger, growing up here, my best months were always followed by my worst months.
Exactly.
And why?
Yeah.
Because I come out thinking I'm a hero and I know everything about the market. And what happens? Then that's when you get
the market will show you that you don't know.
Exactly. You get solid dose of humble pie thrown in your face. And I think that's it, right? And you mentioned the word emotion. I mean, that's, I think, the hardest part about trading is that it's getting control of your emotions. It's like I said, it's not, technical analysis. It's a tool. Fundamental analysis. It's a tool. These are all tools. But I guess, if we had to draw a comparison, it's a tool like a wonderful carpenter might be a great craftsman with, he's got the tools, but he's also got the skill and the know-how to use those tools correctly. And in trading, it's the same, right? You can have the tools. So you can have a technical analysis package. You can have, news feed and fundamental information coming your way. Doesn't mean that makes you guaranteed success. It's a tool to do the job, but it's how you use the tool that determines whether you're going to be successful or not.
Exactly. Yeah. And I think that's one of the things that you learn that I learned in the prop firms as well, is that, just because I'm now in this firm, I've got like the best trading platform, I've got a low latency thing, I've got the lowest fee structure, on earth. It doesn't mean that I actually am equipped to be able to do this.
Yeah.
And yes, I've now got by the second run in the prop firm, by that time I've had many years of experience of, managing people's money and running a trading desk, running like a whole stockbroking desk for a firm in Joburg, and all these things. And you realize that none of that actually helps you make better decisions.
No.
Right?
Yeah.
You still get stuck, down 30 grand of the day, looking for like a Hail Mary swing to get you green, so that you don't have to settle this 30 grand bill that you worked up for yourself,
Yeah.
So it's I don't know, day trading is not necessarily for everyone. But I think you asked about what do prop firms, how can they sort of, guys kind of look at these prop firms and think, this is what I want to do. So what's the benefit of a prop firm? And I mean, there are very clear benefits. Like I said, it doesn't necessarily work for everyone, but for people who are cognizant of the fact that this is a really, really difficult task to do, and are willing to be disciplined enough to stick to the rules that this prop firm gives you. So for example, don't lose more than 2 grand in a day. I mean, 2 grand for some might sound a lot bigger or might sound a lot smaller for others, who knows, right? But it's a good rule. Like, if you lose 2 grand, go home. If you are willing to stick to those rules, and you are willing to be sort of patient with the process and really disciplined around your approach and put in the work, I think a prop firm can be extremely, extremely helpful, because it gives you a number of things. It gives you a community of people that, one, understand what it is that you go through. Two, really want to see you win, right? Because they're all in it just like you. If there are 20 pairs of eyes all looking for opportunities in the same place, it's a lot easier to spot opportunities.
Sure.
So there are sometimes, in one of the, prop firm or whatever, somebody screams out some stock. You don't even have to think. I know it's that person. He's screaming this, buy.
Yeah.
What happened? Oh, the sense came out. Okay, lekker. Okay, I'm selling now. Thanks. I made 4 grand.
Yeah.
So that camaraderie and teamwork is something that is extremely beneficial of being in a prop firm. And obviously also the fee structure, right? There's also, but again, that's not necessarily for everyone. If you're not a really high frequency trader, it's not really going to help you that much.
Yeah. What about the cons? I mean, you've given us some nice pros about a prop firm there. What are the cons?
Cons are sometimes there can be a bit of groupthink, right?
Yeah.
So that happens. Also, there are fixed costs, right? So,
Yes.
so for example, that I don't know if you want to talk about sort of fee structures and that kind of thing.
Give us
but
a ballpark,
generally,
because I do want to talk about that, and I know it can vary from place to place, and firms will tailor structures for different people's needs. But so give us just a sort of an overview. I mean, there's a standard desk fee.
So generally,
places.
there's a fixed desk fee, which is around 10 or so grand a month,
right?
And that should cover your data. So I mean, and you know what? I've interrogated this because I've now looked at this from many different angles, and like you try to reverse engineer.
I guess you're on the other side of it now.
You know how they do this. The reality is the data feeds are expensive, hey, because you buy data directly from the JSE.
Yeah.
And then you've got to have your own server. You've got to co-locate that server in the JSE basement. You've got to run software on that server that you've got to license and this and that. It is enormously expensive to set up one of these operations. Yeah. So I understand the logic behind why the fee structure is the way that it is, to be honest. So generally there's a fixed desk fee. So this will cover, your computer, the software, the data, access to information, all that kind of stuff.
Right.
Some places offer lunch, so you can pay a refreshments fee and then you get breakfast and lunch every day. Some don't, some do. Then there's generally a profit share agreement as well. Yeah. So depending on how, for some firms, there are a funded versus non-funded option. So if you fund yourself, then you are generally on an 80-20 split. So you keep 80% of your profit.
Yeah.
The firm takes 20.
Okay.
If the firm,
and if you, just so that I understand that you fund yourself, so you stick your cash in whatever that.
I put my own money in my own collateral account.
They then they leverage you up. So they'll give you.
They leverage you up. Yeah.
Use their balance sheet to leverage you up. Okay. Correct. So that's the benefit, and that's why you would be willing to give away 80% of your profits.
No, well, you give away 20% of your profits.
Sorry,
you keep 80.
Sorry, giving away 20, keeping 80. Yeah. Yes. Okay.
And also because if you look at so generally there's two different ways, and I think the JSE has now changed it from, I'm not sure if they actually did change it in the end, but there's two different ways of doing it. You can either have a fixed hit cost per transaction, or you can do like a percentage basis points based charge. So I think it's now gone to basis points as the standard. I don't know. I might just have to check. I remember there was some talk about it. I think it is basis points as a standard now, but before that it was like a fixed hit cost. So you would pay like 17 Rand, or depending on the firm, depending on your deal, it can vary from like 13 to 17 Rand or 20 Rand or whatever. So let's work for 17 Rand as an example. It's also variable on the value that you're trading and the price of the equity. So Naspers, a single hit might be 28 Rand, as where a first round, a single hit might be 17 Rand 50. So depends on a number of different things. But so that single hit cost is irrespective of the value traded, how many transactions are settled in one matched trade, or how, that every trade matched has a fixed cost. Right. So if I bid for 1,000 Anglos, for example, and somebody sells to me 1,000 and somebody else, and you on the other side see 1,000 bid, 1,000 sell, bang, match, one order execution, that's $20. Or, let's use 17 Rand as an example. That's 17 Rand for your hit cost.
Yeah.
Or if I go bid for 1,000 Anglos and somebody sells to me, somebody sells 200, somebody sells 300, and somebody sells 500. That's now 3 hit costs, or 3 hits. So I now pay 17 Rand 50 times 3. Okay. So that is hugely cheaper than, a basis points charge. Of 20 basis points if it were a CFD, or 50 if it was an equity, or some places are charging 65 or 70 or whatever, right? So that is massively, massively cheap. So if you start thinking, well, okay, I'm paying away 20% of my profit, but I now have the ability to profit from a 0.1% share price move. Yeah. Now suddenly the doors open, because you look at, the typical CFD account, like minimum 50 Rand a trade, because you've got to cover fixed hit costs, or 20 basis points per trade. And generally there's like a huge supply chain of people, prime brokers, banks, intermediaries, platform providers. Everybody needs to get paid in that equation, right? 20 basis points is like very thin margins. But anyway, so you know, if you take that trade at say 20 basis points, the share has to move 0.4% for you to break even.
Yeah.
Okay, so you can buy it here, sell it there, and you're at break even if it's up just under 0.5%.
Yeah.
If your basis points charge at a prop firm, so you either have fixed head cost or basis points charge, and then you might be paying like 3, maybe 4, 2.5, 3, and that sort of, depending on how much volume you do. It's a variable cost. It's never sort of fixed, right?
Okay.
But let's say you do it for 4 basis points. So now in less than 0.1%, I can make a profit.
Yeah.
Because my cost is 0.08 in and out. And at 0.1, I'm making profit, as where everyone else at 0.4 aren't even breaking even yet.
Yes.
So now suddenly I can trade a 10-cent range on first rand, and I can make money.
Yeah. Okay.
Right? Okay. Where you go bid for 5,000, offer for 5,000, bang, 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 it bounces between the two all day. And that was a not, well, before Steinhoff collapsed, that was a good strategy. It would range in 10 or 20 cents, and you could just play that range the whole day, right?
Yes.
And that a retail trader wouldn't be able to do.
Yeah.
So to me, that justifies, okay, well, you give away some of your profit, but still you're making more than you would be if you were a retail trader trying to do the same thing.
Yeah. Okay.
And depending on also different firms, like if you have some firms might fund youngsters, there's a specific profile of people that they're for, sports people, sports-minded, experience and that kind of stuff, whatever. And they might then fund 1 or 2 of these individuals. And on that basis, then obviously the profit share is a very different equation until such time that the capital invested is returned and whatever else.
Yeah.
But that's also quite an interesting thing. I don't know if many guys are still doing that, to be honest with you. I think the market's been a bit tough
okay.
over the last couple of years.
All right. Super. Now, you're also quite involved with the education of many traders. Yeah, I think you've helped other traders through the years in some of the work that you've done. I mean, you mentioned that the success rate is low. We all know this. It's not new information. I mean, you go onto any of these CFD provider websites and they'll tell you that, I mean, right now, I know IG markets are showing 77% of the clients lose money. Okay.
Yeah.
And I watch that number. It ranges between 70 and 80% all the time of traders that lose money through the firm, and legislation states that they have to disclose that. So all the CFD providers do it, and they all show a similar number. Okay. So it means like, 3 out of 4 people on average lose money trading these leveraged products. And that's not to say that the other 1 out of 4 are making a fortune and living on yachts. Not at all.
They're mostly breaking even. There's 1 or 2 that are making a fortune and living on yachts, but
it's like everything, right? It's like professional golfers. Like there's lots of hackers like me, and then there's 1 or 2,
that are Tiger Woods. Yeah,
exactly. Yeah, right. So it's the same with every profession in the world, I guess. There's a few that really, really make it big and are incredibly successful. Trading is no different. But in your experience with retail traders, what are the major pitfalls that are the reasons why the success rates are so low?
I think there's a couple of things, and I'm obviously very guilty of these too over the years, and even this year has been really hard. I won't lie. It's not really knowing when to step away from the market, particularly in more difficult conditions where you feel that you have to be involved all the time. I think also retail traders tend to overtrade. And I think a lot of the time they just trade the wrong stuff. I know that it's not necessarily everyone's cup of tea, but OTC Forex products are not your friend, guys. If you're listening out there and you need to hear this, you need to hear this. Like, it's not your friend. Equity derivatives, yes, they're more expensive to trade because, there's all sorts of settlement costs to get these things traded through the exchange and all sorts of things. But the counterparty is another person or a very large institution. Yeah. Now you trade some over-the-counter, let's call it a Forex derivative or a crypto derivative, is the latest, greatest, in the pot. And suddenly a company like FTX just goes down, right? Who's your counterparty? A lot of these things are designed for you to lose, particularly in the Forex space. So the bigger and more reputable companies, some are multinational listed entities. Those are generally pretty safe because they're under enormous amounts of scrutiny from various regulators across the world, right? But every now and then there's like sort of Forex trading platforms pop up. And they all kind of trade, based around MetaTrader 4 or 5 or whatever it is. And, those instruments have like 500 times leverage. Like, it's a recipe for disaster.
Yeah.
I got $100, you're going to give me 5 grand's worth of risk or 50 grand's worth of risk with my $100. Like, what is my chance of success? If that instrument I buy moves just a little bit, all my money's gone.
Yeah.
Like, that is the trap, right? So I think a lot of the time, and I was guilty of it, I still sometimes am, I get too excited and I want to trade too much and I want to trade too big and I want to trade too, want to be in and out the whole time, because if, I'm a trader, I'm supposed to be trading. I think the thing to do, if you're new, is to just watch. Again, lesson learned from a prop firm. Just watch the market for 6 months and track the stuff on a sheet of paper and get your excitement done on a demo account. And then when you eventually do hit the market, remember, your job is to survive and to protect capital, not to make money.
Yeah.
So yeah, and stay away from the Forex stuff. Trade stuff that you understand, right? I mean, advice I think that I even got from you many years ago. Pick 5 stocks, just 5 stocks that you follow and everything about. When their results are, what their previous earnings were, what projects they're busy with, the average daily traded volume, where the support resistance was. Yesterday you were watching it, there was a guy buying it at 12 Rand or 15 Rand or whatever the price is, non-stop. 5 things that very, very, very well, and trade those and only trade valid setups. Don't trade because you're bored. Don't trade because you feel under pressure that, I have to do something. You have to. A lot of people emphasize, you need to have a strategy. And yes, you do need to have a strategy, but your strategy can be somewhat fluid as long as you are ensuring that you are taking either asymmetrical opportunities where, the payoff is significantly larger than the potential risk, or you have a firm understanding of what you're getting yourself into. So yeah, I don't know if that's very helpful.
Yeah, it does. It is helpful. It certainly is. You talked about strategy, and this is something I wanted to ask you now. I mean, in terms of your own trading and the sort of routine that you follow, I mean, something I see that you put out each week, I think it's every week, on Twitter, you publish it, and then you can click the link where you go to what you call your weekly game plan. And that's a couple of stocks that you've analyzed technically. Sometimes it's not only stocks, it could be gold, or it could be a commodity or a currency or a whatever. It's interesting. I mean, I like the work that you do there, and I find that analysis is actually quite good. And a lot of the time I find that my thinking concurs actually with the analysis that you've done. But obviously that talks to some sort of a routine, right? That you're doing that on the weekend. But does it go deeper than that? What does your typical routine look like at the start of a day before you get into that trading arena? Have you got a specific routine that you follow? And the other thing is, do you have a playbook that dictates what a trade looks like to you, or is it sort of
and which trades are higher probability of working out and which are not? So I do have a semblance of a trade, of a sort of a playbook, where you kind of keep track of, this trade was this setup. You just log all the stuff in a spreadsheet basically, and then you can at a later stage say, okay, show me the success rate of all the asymmetrical or the flat top triangles. Every time I traded a bullish break on a flat top triangle, how many times did I get that right? And then you try to avoid the ones that you have low success rate and sort of size up on the ones that you have high success rate on, right?
Yes.
But I think that the routine, and it was tough to maintain. I mean, we had a whole pandemic and stuff, and I'm really only starting to get back into it now. I've started doing a bit of yoga, right? So wake up nice and early and do some yoga vibes, gets you nice and sort of balanced for the day. And then on the weekends, basically go through the chart. I also subscribe to a number of different we'll call them research aggregators, where they get tons of research, institutional research. They summarize it for you nicely, and they present it in a different format. There's lots of, like, there's great newsletters and there's not great newsletters. The good ones are worth paying for. The bad ones promise instant riches. So Anyway, so there's a couple of newsletters and stuff that I try to read. Some of them come once a week, some of them come once a month. So I try to read those when I get them. So generally, after I've published the weekly game plan, then on Monday morning, I'll get a very interesting newsletter, which sometimes then I realize, like, wow, this is what I thought on Sunday. And then on Monday, maybe I might have gotten it wrong,
Okay.
So that's quite an interesting exercise sometimes. And then just to make sure that I go through the entire, at least the top 40 every week. So on Sunday morning, you do your stuff, you get your little yoga vibes done and dusted, grab your coffee, and I go through every single chart. And for the most part, not a lot changes. Like, you'll see that a lot of the time, I'll have drawings on the chart and I won't change them for weeks or months at a time, as there's like a longer term sort of macro idea that's building behind it. So like these downside targets, and I think I said this week that, I'm stubbornly hanging on to these downside targets in the S&P 500, even though I think that in the short term we probably rally back up to the trend line, which is quite a ways higher. It's probably like 10% up, right?
Yeah.
But there is other information as well, which is that macroeconomic research, where I'm starting to spend more and more time, actually, because it's fascinating, number one. And I also think there's in there that drive these trends are very helpful to understand, right? So I'll basically try to read as much of that as I can, sort of during the course of the week. And at least once a week, sit down and go through every single chart and try to just try to approach it with a clear mind. Every now and then I have to say, okay, this chart, I've had this idea, I've had this channel line up here a few months now, maybe I've got it wrong. Please, remove all the annotations, back to it next week, look at it again. In terms of the intraday, really super actively speculative trading, I've not done a huge amount of intraday trading in some time. I've learned, sadly, that I am temperament-wise not an intraday trader. I think it's a lot of fun. I think it's awesome. I understand the concepts. I can see what is necessary as a skill set to make it work. One of my colleagues, Jonathan, is a phenomenally good intraday trader. But he's got a skill set that I don't have, right? And I've got to acknowledge that. Like, that's not where my strength is. And but so, my trading is more sort of looking at daily charts, taking swing trades, very clear parameters. If it breaks above this level and it closes there tomorrow morning, I'll buy it with a trailing stop here. I've also started using more and more sort of volatility-based trading stops. So just ATR times 2, trailing stop. Once you've
range.
Once you're you've got a hard stop level when you enter into the trade. Once you've exceeded that and your ATR has dragged up to where the hard stop was, you switch to ATR and then just let the trade go, right? So that I've started finding to be quite successful, although I have to admit that this year has been really, really tough for me. Also my career kind of started 2010, right? So I've not really seen a real proper bear market. And what happened in 2020 was hard and fast and ugly, but it was over very quickly. And this year is a lot different to what that was. So I've been having a very hard time in the short-term trading so far this year. The longer-term stuff has been okay. I find that that's what I'm, I suppose, enjoying a bit more, because you can take longer-term positions, and that's more sort of strategic positioning. And now we're holding a lot of cash, and we're holding some commodities, and we're holding some energy, and these are like sort of the thematic macro things, I think, that are driving the market. And that seems to be working really well. We're actually still positive on our portfolios, both locally and offshore, for the year. On the long-term stuff. The short-term stuff, it's been wild. It's been really, really hard. So I think maybe it's good that you asked these things, because maybe it's a good time for me to sit down and think, well, maybe I should relook at my routine, because I remember many years ago, I had a much more firm routine, although I was also then, trying to day trade a lot more actively in the market than what I am now. But
I certainly find that having a proper routine and a structure to dictate what trades look like, and it helps. And that point you made about over trading, and I think it's an important thing to try and get to terms with as a trader, is that you shouldn't overtrade. You don't have to trade all the time. Being a trader doesn't necessarily mean that you're buying and selling 100 times a day. It can be a lot less frequent than that.
It can be
it can
4 times a year.
Correct, and you're still considered a trader.
And
exactly.
I think one of the biggest lessons that I'm, I guess, still learning is that the money is actually made over time. The really good trades take long to work out. I remember there was a client many years ago. I don't know if you'll see this, but I put up a chart on an Aspen Head and Shoulders chart.
Yes.
And he wouldn't believe it. And then, at some point the thing started breaking, and he then phoned me up, and that was the catalyst. He's like, okay, I'm going to open an account with you because I saved him a huge amount of money because he had a lot of Aspen shares.
Right.
And if you take that Head and Shoulders playing out, it took almost a year and a half for that thing to reach target, but it did.
Yeah.
Right.
Yeah.
If you were short that whole way, that was a massive trade, right?
Yes.
And if you look at, oil, for example, now, like in the offshore portfolios, we've been long oil for like 2 years. I think there's more to go, right? I think we probably go back to that 130, maybe even above a barrel kind of thing. And if that happens, then you're looking at a lot of those oil ETFs, a lot of the oil producers, companies like Shell. These guys are going to make an enormous amount of money. But uranium is another great example of that. That uranium trade might take 4 or 5 years to play out, but that's the kind of trade that you make a huge amount of upside on, right?
Yeah.
And I'm starting to learn that, at least for me and for my personality type, actively jumping in and out of the market 5 times a day is not as rewarding as finding an opportunity that's like an asymmetrical opportunity where you say, okay, we have an energy crisis, we have this a lot of pressure to go green. The only real thing that is, super efficient and relatively safe is nuclear energy. And we're fighting against it tooth and nail. But the truth is, at some point, we're going to have to accept that this is the future, right? And if that happens, then we're well positioned to take advantage of that over the next 5 or 10 years.
Yeah.
And those are the kind of ideas that I think I've been a bit more successful at over the last years. And it took me flipping 20 years to figure that out, right?
Well, this is it. Okay, so this is the last question because we're out of time, almost out of time. It's taken you 20 years to figure this out, right? So 2 decades. But you're not quite 40. You're late 30s, right?
Oh, almost there.
Okay, almost
Getting
there. So if you had to go back 2 decades, go back to 18-year-old Petri, and give him some advice for the future about his trading career, what would you tell him now?
Don't sell so many stocks because you need the money. I remember when I worked at Investec or at the bank, I had a little trading account that I started saving up a bit of cash in money market. And then when it was like enough money, I could move it to the stockbroking account and then buy some stock. Some of the first things I was buying, well, I still have some stuff that was, suspended and still is. But there was Sasol, and I think I got Telkom and Vodacom, and it was still SAB back then. And then some years went by, and I wanted to start day trading, and I needed a bit of capital, and I'd now built up this little portfolio, and I liquidated it. And if I think back now on how much money I would have made on those Sasols, the dividends would have more than double paid for what I paid for the stock back then. Yeah. And through the up and the down, I would have still made a fortune. So I think the key is be more patient, and don't, because leverage kills, number one. Yeah. It's when you are too leveraged is when you take losses that you really don't need to take. And 2, always make sure that you have something in the bottom drawer, right? So if you buy stuff with the idea that this is for long term, even if it is 30% of what you can save in a month, I can save 1,000 rand a month, $300 or whatever it is, or whatever your individual numbers are. Take 30% of that stuff and stick it somewhere that you will never touch it. Look, there are obviously some things you might want to have sold, like Steinhoff or whatever. But even through the years, if you held your Steinhoffs and you held your Capitex and you held your Sasols and you held all your stuff, Steinhoff can blow up every now and then. It's fine. Your portfolio will be fine over time. The market goes up over time. It grinds higher, and you just need to be in it, and in it for a long time. So yeah, lesson to 18-year-old self, be more patient. Don't sell long-term investments to solve short-term problems.
Yeah, good advice. Super, Petri. Well, it's been great speaking to you. We've come to the end of our time, so I'm going to wrap it up. But it's been excellent. Cool. Thanks very much for your insights and for your honesty, and keep at the good work that you're doing.
Thank you very much. And thank you for having me, man. It's a pleasure talking to you again.
Good to be with you. All right. Take care, Petri.
Cheers.
You're listening to Talking with Traders, a podcast series brought to you by IG, a world-leading online trading and investment provider. If you haven't checked out the IG online trading platform, please do so and visit IG.com. Also, make sure you subscribe to the podcast series on your favorite podcast app or website by clicking on the subscribe button, and you'll be notified weekly as we release new episodes.
Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.